Hey, welcome back, subscribers, to my world of stocks. Google just reported earnings. It's pretty crazy. So, I'm recording this like right after the earnings report just came out, and results were, in my opinion, phenomenal. But CapEx is once again a giant concern. So, we're gonna run through all of it. Just do a very quick recap for you guys. It's gonna be a little bit of like, sort of like a live stream type of style, but I don't have everything set up for live streams yet. I'm planning to have that hopefully soon. But for now, I'm just going to be kind of going through the numbers here with you guys in real time and just sharing my quick opinion. I haven't really had a whole lot of time to digest everything, but I'm just going to kind of react to the earnings report with you guys. And we'll take a look at how the stock is performing, what I was looking for in the earnings report, what I like, what I don't like, all that good stuff. So hit that like button if you like these really quick kind of recaps right after a company reports earnings. But let's just go ahead and jump into it. Going into the report, let me just tell you guys some of the things that I was personally looking for. This, of course, being one of my personal largest holdings in Google. It's also our number one largest holding in the community portfolio, too. So we kind of had a lot writing into this report going into it today. And some of the things I was looking for, of course, I wanted to see, the main thing is like strong financials, because the stock going into the report was up like 70% in the past 6 months alone. And they even joined the $4 trillion market cap club about a month ago for the first time ever. So that's a gigantic milestone. So I really think that, like, Wall Street wanted to see very strong financials to justify the valuation. At least that's kind of how I feel about it. I think Wall Street probably cares more about CapEx right now, with how much companies are just really spending on AI infrastructure and just pouring money into it. And of course, Meta kind of got away with it. They're spending a giant amount, but Wall Street sort of gave them like a pass on it. But Microsoft wasn't so lucky. Their stock actually fell a lot. So that's kind of something that everybody was wondering about with Google earnings now is, are they going to get a pass from Wall Street if they're spending a giant amount on AI? Will it be justified? But I think the financials will definitely help in that regard if they can put up some really strong sales and profits and beat analyst expectations. I also wanted to see more information on the Apple and Siri deal. Any specific details on that new deal to power Apple's AI features by using Gemini across the billions of active devices that Apple currently has out there. Getting any kind of clarity on how big of a growth catalyst this might be for both companies really would also be beneficial to me as an investor, because I do think that that's a huge deal. Like, I think it's a big vote of confidence for Google's AI and Gemini specifically. The fact that Apple decided to go with them instead of OpenAI or Meta or anything else. Then Google Cloud growth. Of course, Amazon and Microsoft are the two big dogs. They're the ones that really always hold the most market share, and they're always still growing at giant rates. So wanted to see, can Google's cloud continue to be rising as well? Can they keep up? Can they match some of that same demand? Obviously, they're not going to match it exactly, because Amazon and Microsoft are so much bigger when it comes to cloud, but can Google at least put up some good growth rates? Because they are in a smaller size, I want to see high growth from them. And you're going to be, I think, shocked when you look at, I took a quick peek at the earnings report numbers, and there were some things that really, like, I thought were incredible. So that was something going into the report that I really want to see. Cloud infrastructure services, the market, by the way, the whole market generated revenue in the prior quarter of over $100 billion. It was up 28% year over year. So I want to see growth that is higher than the market. I want to see above 28% growth. Google Cloud growth is usually in the 30% range. So I want to see at least that amount, right? Like the market growing 28%. Google being smaller than Amazon or Microsoft, I feel like they should be growing at a faster rate than the market, ideally, in my opinion. But yeah, we'll take a look at that in a second. Also want to hear more about, AI monetization and search. So any evidence that like AI overviews, that feature in Google search, is helping them maintain their dominant market share, their dominant lead there, if it's helping them grow as a business. The new personal intelligence feature of connecting Gemini to other Google apps, how is that going for Google? How is Google doing with AI services? How are they doing with subscriber numbers? Are people paying for these services? What is revenue looking like? Are they growing sales? All that kind of stuff was something that I wanted to see in this report. And of course, capital expenditures. I listed this on my bullet points here of things that I want to talk about in this video. But again, I already mentioned it before. But with how much money companies are just pouring into AI infrastructure, this is what I think is really going to be the biggest concern for Wall Street and analysts and the media talking heads and investors, is how much they're spending on AI and if that's going to scare them. And then I also wanted to just maybe hear a little more about YouTube ad momentum, because for me, that's always like a telltale sign of like, is the economy doing okay? Or are these macro headwinds really starting to weigh on the economy? Is one of the ways to know that is just by looking at how much are companies spending on YouTube advertisements. Because with the rise of digital advertising and with the rise of YouTube, I think YouTube is, well, I know that YouTube is the biggest video platform out there. And I know that that's one of the most attractive places to be buying advertising space. So how is that performing for Google? Are they seeing good growth? Are they seeing good sales? If it's looking strong, then that's a good sign for the macro economy as well. So that I wanted to hear more about YouTube. And then just maybe any information that we can get on any of their, progress on any other bets that Google has. Google does so many things, but for example, Waymo, their autonomous driving division, Waymo, they just reached a massive valuation of $126 billion after raising $16 billion in a recent funding round. So any updates on how the unit plans to maybe use that money? How are they going to be scaling up? Hopefully expanding into more cities in the coming months and years. They just launched in Miami, by the way. That was only like a couple of weeks ago, so a big milestone there. So are we going to continue to see momentum there? Just another thing to maybe keep an eye on. Okay, so let's turn over to the stock. Let's just take a look at it really quick here. So we're looking at Google stock here. I'm in the Google Finance app here. Don't mind this 0% of your portfolio. I don't use Google Finance to track any of my portfolio, so that's why it says 0%. But when looking at this stock here, so it's okay. So it looks like it's actually climbing now. Wow. Okay. So when I first started recording this video, it was down, or right when I was about to start recording, and it was down by a lot. And check this out. So if you look at like the range from today's trading session up into after hours trading, and once the report came out, they were down like around 9% in after hours trading. So they were down big, like 9% for the day. And now it looks like they're actually up. In after hours, they're up about 2%. That's probably going to offset with the market hours minus 2%. So they're basically like flat right now. If you look at where they are right now and where they started the day, the stock is kind of flat. But we'll see. Again, it was down like almost 9%, around 9%. And that's because of, in my opinion, it's definitely because of CapEx. They're spending a gigantic amount of money on. So let me just show you guys the report here and we'll dive into the numbers and everything. So when looking at the report, I'm going to skip all of this stuff here because we can actually look at like the presentation to go through all the different charts that they have. But I will just quote here what Sundar Pichai said, the CEO of Alphabet. So he said, it was a tremendous quarter for Alphabet and annual revenues exceeding 400 billion for the first time ever. A gigantic amount of money there for the year. This goes on to say the launch of Gemini 3 was a major milestone, and we have great momentum. Our first-party models like Gemini now process over 10 billion tokens per minute via direct API use by our customers, and the Gemini app has grown to over 750 million monthly active users. So a giant amount. Again, I'll show you the charts here in just a second. Search saw more usage than ever before, with AI continuing to drive an expansionary moment. It says, we continue to drive strong growth across the business. YouTube's annual revenue surpassed 60 billion across ads and subscriptions. We now have over 325 million paid subscriptions across consumer services, gigantic amount, led by strong adoption of Google One and YouTube Premium. And Google Cloud ended 2025 at an annual run rate of over $70 billion, representing a wide breadth of customers driven by demand for AI products. And then finally, we're seeing our AI investments and infrastructure drive revenue growth across the board to meet our customer demand and capitalize on the growing opportunities. We have ahead of us, our 2026 CapEx investments are anticipated to be in the range of 175 to 185 billion. So 180 billion dollars they're planning to spend this year on AI infrastructure. And then let me just show you this. So this was from what is this, 24/7 Wall Street.com. So they were just kind of tracking the earnings as all the figures were coming out. And here's something that they mentioned here. So they said, I have CNBC on in the background while updating this live blog, and the guests are laughing in disbelief at Google's CapEx numbers. Oh man, it like jumped up. Sorry about that, guys. Um, well, anyway, he was just saying, this person was just saying that the media was like basically laughing uh at the CapEx numbers. Let me see if I can find it again. Sorry about that, guys. Okay, so here it says Broadcom shares have soared 6% in reaction. Other stocks with massive exposure to Google CapEx. So basically, companies that would benefit from Google spending so much, they're probably going to be in the green tomorrow. So anyway, so the media is already like laughing at these numbers. They think they're incredibly high. Again, Meta got a pass. Microsoft did not get a pass. Sorry, excuse me. And Google, I don't know if they're going to get a pass. So far, the stock was kind of flat at the time of looking at it. But let's dive into the earnings report and we'll take a look at some of these charts here. So taking a look at it here, look at how incredible these numbers are for Google. I mean, this is the reason why I invest in Google so heavily myself, because they just put up phenomenal numbers all the time. But growth in search, 17% growth year over year. Like, for how dominant search is to still be growing at that high of a rate, it's incredible. So absolutely, I would say AI overviews is helping them maintain dominance. And by the way, that's always been a huge kind of bear argument from the bear camp, that AI would disrupt Google search and it would disrupt their market leadership there. But by integrating AI themselves, I think they've actually done a pretty good job of maintaining some of that dominance. And again, we're seeing it with this huge growth. Okay, now Gemini app, monthly active users for Gemini app, 750 million. 750 million. That's a gigantic amount for the Gemini app. So, for all the naysayers, for all the people that say that Gemini is not as good as the other AI models or isn't as popular, the numbers speak for themselves. People are in fact using it. Excuse me, guys. I'm drinking an energy drink, so I might burp a little bit at times. I apologize for that. So what else do we have here? Well, YouTube, revenue from YouTube ads and subscribers. In 2025, it was at 60 billion. So YouTube is still doing very well. They'll break down the growth a little lower, I believe. So we'll look at the growth rate for that. And then annualized revenue run rate, 70 billion for Google Cloud. Check this out, guys. For the fourth quarter, Google Cloud was up 48% year over year. Now, remember, I told you guys, the market for cloud was growing in the 20% range. Google Cloud themselves were growing at around a 30% range. Now they're putting up 48% growth. That's close to 50% growth. So Google Cloud is on fire. Hence why, guys, they're spending so much in CapEx. That's why, because look at the numbers that they're putting up. Like, they want to make sure that they capitalize on that momentum. I know a lot of people disagree. I know a lot of people are very skeptical of that they're very worried about it. I get it. But man, I don't know. Wait until I show you how profitable this company is when we dive a little deeper into the numbers. I think they can afford it. Just my opinion. But let's keep going. Tokens per minute. So this is like AI use, 10 billion plus tokens being processed per minute. Huge amount. Paid consumer subscriptions, 325 million. That's across Google One, YouTube, and other. 325 million. Okay, let's dive into the numbers a little bit more. So sales up. In the quarter, sales are up 18%. In the year prior, they were up 12%. So growth is actually accelerating in the quarter. For the full year, 15%. Sorry, guys, my eyesight is a little bad, so it's a little hard for me to see the monitor. If I get any numbers wrong, just let me know in the comments. But I believe that says 15% growth there, and I believe that says 14% growth for the year before. So they're doing phenomenally well. Again, over 400 billion for the first time ever for the year. So gigantic, like unbelievable amount of money that they're generating. Now that's in sales, but look at operating income. 100, what is that? Almost 130, almost 130 billion dollars of operating income for the year. Insane amounts of profit, really strong margins in the above 30%, 32%. So the company is just like printing cash. Of course they're going to be spending it. I mean, look how much money they're making. Okay, let's keep going. Now, obviously they're spending more than that, but okay, let's just keep going here. What else we got? So this is Alphabet cost of operating expenses. Obviously that's going to be going up. That's going to be rising. We'll dive a little deeper into that in just a second. Google services, revenues, and operating income. So this is like all their like services, softwares, things like that. So take a look at some of these numbers. Well, we have YouTube is in the green here, right? So YouTube was up almost double digits year over year. So, that's not bad. That's pretty good. Almost double digits. Especially when you consider like all the headwinds macro wise, the economy has not been great, guys. I mean, we've been dealing with so many issues: inflation, interest rates, tariffs. I mean, so many things going on out there, geopolitical headwinds and tensions and conflicts, all kinds of stuff. So almost double digit growth. I mean, that means advertisers are still spending. That's not a bad sign. Okay. What else? Google search up 17%. Again, still growing incredibly well. And then we have subscriptions, platforms, and devices, 17% growth. The only thing that was down was Google Network, but it's also, what is that? Their smallest. So that one was just kind of almost just kind of flat. But operating margins for services, again, you're going to see very good margins. You're going to see like almost software like margins for this division. And margins were at almost 42%, and it was higher than the year before too. So very good margins overall. Google Cloud revenue and operating income, a gigantic improvement year over year, huge improvement, and on both the top and bottom line, with revenue again growing 48%. The year before it was 30%. So like I told you, it typically grows in the 30% range. Now it's getting close to almost 50%. Absolutely incredible. Capital expenditures. Now here is where things get very dicey. So don't just look at the sheer amount that they're spending, which is obviously incredibly large and it's only going to get worse, but look at how much it's been growing. Like the growth rate of CapEx continues to get bigger. And this is what is really going to scare investors, because for the fourth quarter of 2024, CapEx grew by 30%. Then the next quarter, it grew by 43%. Then it grew by 70%. Then it grew by 83%. And then it grew by 95% last quarter. And now in 2026, it's going to be at around 180 billion. So of course, investors are going to be worried about that. And for good reason, right? Like look at their free cash flow. So trailing 12 months free cash flow here. If you look at the cash provided by operating activities, so obviously that went up by 34%. But then when you look at the purchase of property and equipment, that went up by 95%. And the result is that it's eating away at all your cash. So that's why free cash flow as a growth rate, it actually declined in the quarter. It went down by 1%. So it's affecting their free cash flow. And for the full year, it was about flat. So that again is the concern here, that how much are they spending? Again, I think it's justified because I don't really care. I don't really care if they're not making a giant net profit because of how much they're investing. They're already so large, they're already so dominant. I'm not really worried about that. I actually want them to invest that money. What else are they going to do with it? They don't pay huge dividends. Yeah, you could buy back stock, but you could do that later. The market is at record highs. Google stock is at record highs. I think right now, invest the money. Invest the money back into the business. Make yourself stronger for the future, for the long term, because as a long-term investor, that's what I mostly care about myself. So anyway, I think that'll just about wrap it up here for the video. We'll just take one quick look at the stock again just to see how it's doing. But so taking a look at it here, I'll refresh the page just in case that makes any difference. But Google stock, so again, during trading hours, it was down about 2%. After hours, it's actually up, 2.5%. So it kind of balances out. It's probably going to end up having a flat day, even though there was some major turbulence early on, but it might just kind of finish flat. Now, I believe Amazon reports tomorrow. I want to say they report tomorrow. We still have some bigger earnings reports coming up later in the month, like what else is there? Nvidia. So there is some stuff still coming up that could affect obviously the market, but Google was for sure the big one to look at today, and just a little bit of a non-reaction. I think it's just you had the combination of phenomenal performance business-wise, but incredible spending CapEx-wise, and that's why the stock is like flat, right? Because if it was just the phenomenal performance and CapEx was more under control, the stock would have probably soared. But and the other way around, if the business was not growing at these incredible rates, which I understand the criticism, because if the business was not growing at these incredible rates and you had that massive spending, the stock would have tanked. But we have both. But that's the whole thing. Like, are they able to maintain those high growth rates? Because if they're going to keep spending the way they are, they have to perform phenomenally well. This is a stock that, in some people's opinions, not in mine, but in some people's opinions, it's kind of priced to perfection. So they have to perform incredibly well. And a lot of AI stocks are kind of priced to perfection, at least the big ones, maybe the most popular ones. So those type of companies, they really need to keep up the performance if they're going to be spending so much. Do you guys want to look at some other stocks? Let's just take a look at a couple more. So Nvidia, after hours, they are up about 2%, but they were down in the day for over 3%. They were down before the market closed. Microsoft is about flat today when you look at trading hours versus after market. It's about flat. Apple was up a little bit today, slightly negative after hours, so kind of bounces out a little, but they're going to finish like up a couple percent. Amazon is down today, was down about 2% during market hours, and then is about flat after hours. I wonder how they're going to do tomorrow when they report. That's going to be very fun to watch. So anyways, maybe I'll try to get a video out for that one too. Let me know if you'd like that, but I've been really busy lately. I've been trying to push out as much content to you guys as I can, and it has been a little difficult, but hopefully in the future I can start doing some live streams. I think that would help a little bit, just help me connect with you guys a little bit faster, a little bit quicker. Anyway, I hope you guys enjoyed this quick little video. Probably not so little. We've been talking probably for like 20 minutes or more. But anyway, I just hope you guys enjoyed it. And I would love to do a live stream so that I could see your guys' comments and respond to them. That would be a ton of fun. So hopefully we can do that very soon. Anyway, hope you're all doing well, my friends. I got more videos coming for you very soon. So stay tuned. Take care, everybody. Bye-bye.